the best of Money Matters. Market View on Money FM 89.3.
That's right, you're tuning into Money FM 89.3. Time now for Market View with me, Chua Tian Tian, where we take a look at how the Singapore stock market closed for the day, the biggest movers, sectors, and of course the companies to watch. But as always, a quick recap of how we started. Well, Singapore shares tumbled at the open today as investors mulled over the impact of tariffs imposed by US President Donald Trump over the weekend. So back to Singapore, in early trade, the STI slipped 1.5% to 3,800 points after some 87.7 million securities changed hands in the broader market. Now let's very quickly take you through the closing numbers. The STI closed down 0.76% at 3,826 points. In terms of value turnover, that's 1.3 billion Sing dollars. Now gainers trailed losers, 201 versus 348. Top advances for today, let's take a look at them. We've got tier SGX, Shangri-La Hong Kong dollars and Venture Core. And top decliners, we've got GMH USD, DBS and Jardine Cycle and Carriage. Now in terms of companies to watch, we have for you Sembcorp Industries, and we'll tell you why in just a bit. But elsewhere, from investors' reactions to US tariffs on goods out of China, Canada and Mexico, to how billionaire Elon Musk plans to announce some of his plans and updates on the government's Department of Government Efficiency. We've got more global headlines in focus. And joining me on the line on a Monday today is David Kuo, co-founder of The Smart Investor. Hello, Mr. Kuo. How are you?
I'm very good, Tian Tian. Good to speak to you again.
Likewise, and Happy Chinese New Year.
Gong hei fa choi.
Gong hei fa choi, yes. And Mr. Kuo, let's start with Asia this time around. A lot of things happening here. Asian markets down at the open, down at the close as well. Why so? No surprises. US President Donald Trump announcing their tariffs on goods out of China, Canada and Mexico over the weekend. Taiwan's Taiex led losses early on, over 3% down. And on the currency front, Aussie dollar sank to a near 5-year low on the USD as well. So how would you read into investors' reactions to Trump's tariff plans? We're seeing some shock, but isn't that supposed to be expected?
Well, I think it was expected, but I think many people in the market were in a state of denial. They were hoping that the Trump administration wouldn't slap these tariffs on Mexico, Canada, but unfortunately it has. That also, I left out China. So he has. And I think what they are saying now is that now that he's already slapped these tariffs on these three countries, he will be turning his gun sights onto the European Union. He could be turning his gun sights onto the UK. Maybe he'll be looking at Canada, Australia, Southeast Asia, maybe Japan, maybe Taiwan, maybe Korea. So I don't think anybody is safe at the moment, which was probably why the market fell as sharply as it did, because they thought he wouldn't slap that 25% tariff on there, and he has. The upshot, unfortunately, is that it could be inflationary for America. If that were to happen, then it means that any cuts in interest rates by the Federal Reserve this year are probably off the table. If anything, if inflation does come back, then it could even mean an increase in interest rates this year, which would be, I think, devastating for many people in the market.
We talked a little bit about Taiwan's Taiex leading losses today early on. To that end, Taiwan has said it will support firms that intend to relocate to the U.S., including helping them find partners on the ground. Does it provide any form of relief to investors, though?
Well, I think it will, because if you are looking at Taiwanese companies, and if the Trump administration does slap tariffs onto Taiwan, then it means that these companies have no alternative. I don't think, in some cases, their margins are so slim that they can't really absorb the 25% tariff on the goods going into the U.S. And so, as a result of that, the only option they do have would be to relocate their manufacturing facilities into America and do what Donald Trump wants them to do, which is to bring manufacturing back into the United States. I mean, previously, when there were tariffs, they were slapped on China, and many of the Chinese manufacturers moved their production facilities to places like Vietnam, and that way they could circumvent the tariffs. But I think this time around, even Vietnam may not be immune to the tariffs. They may be hit. Taiwan may be hit also. And so these companies will have no choice, Tian Tian, but to move their manufacturing facilities into America. No good going to Mexico, no good going to Canada, because those doors, those gates have already been shut.
I suppose the question that we had with some of the analysts that we spoke to is who will then be the demand driver or the consumers of U.S.-made goods then. But I suppose that's a question for another day, Mr. Kuo. So back to the Singapore stock market as usual. How did the SGX fare today? Any surprises when it comes down to the biggest movers and also the sectors that they lie in?
Well, if you have a look at many of the constituents of the Straits Times Index, amongst the fallers were the real estate investment trusts. And earlier on, we were talking about the possibility of the Federal Reserve not cutting interest rates this year, and even going so far as to increase interest rates. If that were to happen, then, of course, one of the victims of that will probably be the real estate or REITs over here in Singapore, which is why we actually saw so many fallers there. What is interesting, Tian Tian, is that the banks, DBS was amongst the fallers. You would have thought that if interest rates were to remain high, then the banks could actually be the beneficiaries. So even though the banks fell today, I would think that there is a good chance that the banks may in fact sort of start to strengthen when they realize that interest rates aren't going to be cut, which is going to be good for the banks. And Jamie Dimon today was on one of the financial channels talking about the fact that the tariffs weren't such a bad idea for America. He said, if it does cause a little bit of inflation in America, what's the problem? America can tolerate a little bit of inflation. I think what he's actually saying is that it means that interest rates will remain high, which is good for him and his bank, which goes back to the old saying, never ask a barber if you need a haircut. And I think in this particular case, Jamie Dimon would like interest rates to remain as high as possible so that JP Morgan Chase can make as much money as possible whilst interest rates are high.
Okay. Now, if you're just tuning in, we're now in conversation with David Kuo, co-founder of The Smart Investor. Well, Mr. Kuo, let's zoom in on some of the companies to watch right here in Singapore. First up, we've got Sembcorp Industries. Why so? Because Sembcorp Industries inked a share purchase agreement with CleanCurrent Renewable Energy in the Philippines to acquire Puente Al Sol. Now, how significant is the move for the firm if we look at the counter's share price movements today?
Well, there wasn't a great deal of movement in the share price, but this will be its first foray into clean energy in the Philippines. And I think once it gets its foot onto the clean energy platform over in the Philippines, it could mean that it could be able to expand its presence there and fulfill its promise, which is to move into clean energy. So I think this is going to be an investment with a very long runway. Initially, not a great deal of movement, but I think over time it will be a big earner, I think, for Sembcorp. I think it'll be a good thing. But it is something that will take a long time to play out. It's not something that it will be able to buy straight away and say it's going to be accretive to earnings. It won't do anything of the kind immediately, but I think it will do over the longer term.
And Mr. Kuo, from Sembcorp Industries, let's zoom in on SETS. The in-flight caterer and ground handler acquired the remaining 15% stake in its Thai unit called SETS Food Solutions Thailand from Bangkok Ranch, and that is for about 3.4 million Sing dollars. Again, how are investors reading into the news given the fact that it is not expected to have any material impact on net tangible assets per share or consolidated earnings per share for the current fiscal year?
Yeah, I think the amount of money just says it all. I mean, it's only about sort of 3 million Singapore dollars, which is kind of nothing. So I think it was more a case of just cleaning up some of its investments in Thailand. Again, having full control over something means it has the ability to do as it wants. And yeah, I think it's not really sort of such a big deal at the moment, but it could be something that is going to be quite interesting over the long term. I mean, surprisingly, I actually flew through Bangkok Airport this time round, coming back from the UK into Singapore, and I was looking at the Bangkok Air Hub, and it is quite impressive. I mean, Singapore's got a fight on its hands. I mean, Singapore Changi Airport is great, But I think there are many other regional airports around here that could give Singapore a run for its money.
Okay, well, talk about that. Let's fly to China right now, Mr. Kuo. China's manufacturing activity unexpectedly declined for a second straight month in January, underlying the need for Beijing to step up economic stimulus. But I believe if we look at the PMI, the Taiex PMI, it is still above the 50 point separating expansion from contraction. So all in, we've been talking about China for, I think, it has been years since we first started talking about China, isn't it? For years on end now, the question is, are authorities' hands tied? How much of a stimulus can they boost? Instead of monetary measures, can they go for fiscal measures? But will things really change right now with Donald Trump coming into the picture and slapping tariffs on the country's exports?
I think it is going to focus the minds of the people in China. Mm-hmm. And as far as manufacturing for exports is concerned, you can probably sort of push that off the table now and start focusing on the consumers. We've always said that it's going to be the consumers in China that will drive GDP growth. But the consumers in China do not have the confidence to go out and spend so long as the property prices are still in the doldrums. So somehow you've got to try and work out how are you going to get property prices over in China to start rising to give people the confidence to go out and spend. If you bought the property and it's underwater at the moment because you paid more than what it's worth at the moment now, it means that you're not going to have the confidence to go out and buy. And if we have a look at China, I know people don't want to compare what is happening in China today with what happened in Japan back in the 1980s, but it took Japan over 40 years to actually sort of get back. Let's hope it doesn't take that long for China. So China has to do something, and they have to do something about the property market in order to get those people to have the confidence to go out and spend. And how they do it, I'm not entirely sure. But it means a lot of fiscal measures, Tian Tian. It means cutting taxes for the consumers just to give them that ability, that disposable income that they can use not to spend the money, unfortunately, but to use the extra income to maybe pay off the loans on their property so that they will feel slightly more confident because they don't owe a great deal of money and they're not in any kind of negative equity.
Just a curious follow-up question, right? You talked about how the problems in China are largely consumer-driven, which means that you really need to boost up the consumer confidence and consumer consumption. But the thing is, if we are seeing more tariffs on Chinese goods going into the U.S., that would dampen the earnings of Chinese corporates and thereafter filter through to income. Would that weigh on the incomes of the people so much as for the authorities to think that, okay, the property market has some problem, consumption has some problem, we have more problems coming in when it comes down to exports filtering through to income to the people. We really have to do something right now.
Okay. I was thinking about that only the other day, and I thought, okay, so America is going to slap these 25% tariffs on many countries. It's already done so with 2 countries and then 10% on China, and it's going to target other countries as well. And then I looked. The population of America is only 300 million, just over 300 million. Mm-hmm. The population of the world is about 8.7 billion, right? So if you take 300 million off 8.7 million, you still have 8 billion people that you can sell to. And many of the Chinese car manufacturers have said it's very difficult for them to get their Chinese electric vehicles into America. So why bother? Why are they even bothering trying to enter the American market? It's great to be able to sell to American households, but there are still over 8 billion people outside of America that they can sell to. And I think in some cases, many of these companies are probably a little on the lazy side because they've always wanted to target the American market. And I think if the Trump administration is going to slap these tariffs on countries around the world, well, just forget about America and just say, I don't want to sell to you 300 million American people. I'm going to sell to the 8 billion people outside of America. And if they do that, they will have probably an easier ride than to try and sort of bang their heads against the wall trying to get their goods into America. That's what my way of thinking. Mm-hmm. If I was a manufacturer, if I was an electric car maker, I would say, forget America, go elsewhere.
that brings me to a point that we mentioned early on. Since you mentioned the numbers about the populations, let's bring that question in, which is that what Trump appears to be doing is to make the U.S. the factory for the world instead of the demand driver for the world. So the question then is, who will be the consumers of U.S. meat goods then?
Well, part of the reason why people never wanted to buy American-made goods was because it was too expensive.
Yeah.
Part of the reason why Japan was able to sell its cars all over the world, whereas previously people were buying American-made cars, people always wanted to drive an Oldsmobile or a Chevrolet or a Lincoln, and suddenly Japan came along and people said, my goodness, the Japanese cars are as good as American cars and they are a lot cheaper. So why do I need to buy American-made cars? So I don't think Donald Trump is doing himself any favors by saying, if I slap these tariffs on the goods coming in, people are going to start buying American-made goods. No, people don't buy Whirlpool washing machines. They'd much rather go and buy the Korean-made washing machine because they are cheaper. And the whole idea about the tariffs is so nonsensical. And if you think for 1 minute that a country is going to say, oh, if I want to sell my goods into China, into America, you're going to slap on a 25% tariff. Do you think that they're not going to slap a tariff onto American-made goods coming back into their own country? They are going to do exactly that. So just as Canada has shown, you want to slap tariffs on the goods from Canada going into the U.S.? Well, we're going to slap 25% tariff on American-made goods coming into Canada. So forget about selling your whiskey in Canada, your American-made whiskey coming into Canada. We don't want it. And if you want to sell it, it's going to be 25% more expensive. So it's just this trade war that is going on. And there are no winners there, Tian Tian. Everyone is going to be a loser.
Okay. Now, finally, before we let you go, Mr. Kuo, we've got about 2 minutes to go. So billionaire Elon Musk, he's heading the U.S. efforts to string the federal government. Now, he will give an update on the effort of the Department of Government Efficiency early Monday U.S. time or later today. What are you expecting on this front? And also given this week being a big corporate earnings week, Amazon, Alphabet, among those reporting, what to watch?
Well, the thing I don't want to happen is for him to dance, okay? I mean, the last time when he did a dance, it was just so embarrassing. It was just painful to watch. So let's just hope he just sticks to the script and he tells people what exactly he's done. And I don't think he's done an awful lot at the moment. Well, he tried to fire some workers, and there seems to be some legal precedents there about whether or not he can just go around firing people. They tried to offer people redundancy packages. I'm not entirely sure if people don't want to take the redundancy package, they're not going to leave. So it's going to be difficult. What he has actually done is to try and target USA, and he's just saying that he wants to shut USA down completely, which therefore means that many of the aid packages that were supposed to be distributed around the world are not going to happen now. So is that going to save money? Well, maybe it will. If you don't give money away, it's effectively saving money. But you're also going to alienate a lot of countries around the world because people were expecting that. It was already passed by the American government that this money would be distributed. And it's a bit like me saying to you, I promised to give you a birthday present. Your birthday comes and I don't give it to you. I save money. But it's not going to make the relationship between you and I any better, is it?
Okay. I suppose lots to watch indeed. Thank you so much for the insights, Mr. Kuo. That was David Kuo, co-founder of The Smart Investor. Thank you so much for joining us on Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.